He joins us right here. Always good to have you, Robert. All right, you feeling a little more optimistic? I mean, 7% has seemed to be a barrier in terms of real significant increases in ability of people to buy homes.
Look, I liked it better at 6% than 7%, but 7% is better than it was last year. Last year, we were at 8.2%. And so I'm feeling positive. We just saw today that existing home sales in October were up 2.9% year over year, the first annual increase in over 3 years. However, the average transaction volume in the last 3 years has still been anemic. It's been just above 4 million when it should be above 5 million. So we have 3 million homes or transactions that are pent-up demand.
And we bring you on, you come on, we always talk about this. Is that really going to get unlocked? I would imagine you've got to get a lower mortgage rate than 7% to truly believe that you're going to start to address that shortfall, so to speak.
Look, the number that we want is the same number that we wanted, last time we spoke, which is below 6. Give me 5.999 for not a day, but for a couple months, and we will be very close to mid-cycle. But we're at 7, and the 10-year is higher than we expected it to be at this point in time. However, there is a positive sign based on history, which is the year following 10 of the last 11 presidential elections. Transaction volume and prices increased, which reflects that people tend to hold off those purchases during the presidential election year.
You're sounding a little bullish. I've spoken to executives at Home Depot and Lowe's in probably over the past week to 10 days. They both think that housing turnover has likely bottomed. Do you?
Yeah, I think that we can't go much lower.
Can't go much worse is what that's what I'm trying to say.
There's no sign in recent history or data in recent history of going much below 4 million. And we've been at that level now for the last 2 years. And so I don't think it can go lower. And I think there are a lot of reasons we go higher. Year after the presidential election, mortgage rate stability, pent-up demand of those 3 million homes or transactions that should have happened that did not happen. And you can only hold back life events for so long.
And it's below that 6% rate that's really going to be the catalyst.
Below 6%, and we will be back in a normal market.
How about areas of the country where you think inventory can continue to build?
So inventory is building pretty much across the country. In every state, inventory is up year over year. We're up 20% year over year across the country. Again, but we need to grow another 30% to get back to pre-pandemic levels. I'd say the hottest markets, quite frankly, are the luxury markets. As rates increase, it doesn't really hurt luxury buyers who don't use mortgages, right. And they actually benefit from because they're recipients of interest income and they're not paying it in their mortgage.
Right. What's the percentage of first time? Is it 24 somewhere in there?
So first time buyers there's a dramatic decrease in first time buyers. The average age of the buyer today is 40 when it used to be in the 20s.
Wow.
Yeah. And so first time buyers are getting hit because of affordability. And the affordability is an issue because there's not enough inventory.
Right. Are you confident that is also troughing, that percentage?
Well, we need more inventory in the country. It's been a talk of the presidential candidates, of course, President-elect Trump. We at Compass, we've launched new products to help build more inventory in the country. Compass Coming Soon, Compass Private Exclusives, and Compass Make Me Sell program. What they're doing is they take away the risk to list. This is what I mean specifically. There are hundreds of thousands of people that would list their home if there were no days on market or price drop history. Think about people that would want to sell in the spring but don't want to list now because they don't want to accrue extended days on market. All of these products that we just mentioned, they have no days on market, no price drop history, no negative insights of any kind, and we're seeing that bring more inventory to our different markets.
Oh, that's interesting.
And Robert, finally, how are you guys navigating that, deregulation of broker fees, if I could call it that? I mean, what's really going on in your industry now?
So, pleased to say that of all the reports that are out there, and there are multiple different reports, that no one is saying that there's a significant change in commissions in any way. And so we're moving through. We're working with our agents to make sure that they have the best advice possible to give to their clients, but we are not seeing a negative impact.
All right. Robert, thank you.
Great, thank you.
Robert Reffkin from Compass.